Hello guys, welcome to my YouTube channel. Today I'll be showing you how to trade according to market directional bias, and I'll be showing you how to plot out your directional bias. Now let's look at this very quick. This is a monthly time frame in the USD CHF chart. So let's pick out this high, this monthly candle, and this is its low, right? So pretty simple. So just as you see, the market took the high out and then came down and took this low, and ever since this low has been protected. No candle came and take it. No candle came and sit below the candle. So this low is still protected. So what we are seeing, basically, the market actually dropped from the way you see it. The market dropped actually. So the direction, the full direction was dropping. So it's a bearish market. But we know that even in the bearish market, you can still look for sells, for buys. I mean, so you see the market was actually bearish. So you see the pullbacks are also buyers. So you see, all right. Today we will be trading. We'll be seeing how we can trade according to the market directional bias at the moment. So just as you will see, this low is still intact. None of these candles have run over it, has run through it, I mean. All right, so as you keep seeing, the market keep taking some highs, and right, this high, it took the high, left a high here, and this low was taken. The low of the candle was taken. So you see, the low of the candle was taken. So this is how you mark your range. This is how you mark your range. So this high, this candle that took this high came to reference this POI here. So it came down and then it created another candle. The candle took these lows and then push up again and then push up with this. So what we'll be seeing basically is we will be using this low as the low that will hold this trend, these particular candles here. So let's quickly move down to weekly time frame. You see the same thing. These are a bunch of liquidities, and then it was wiped out by this weekly candle and pushed the upside. So the market is coming to this other block here, but I'm actually not sure if this other block will hold the market because of the structure that was created here. You see a low and then a high, a lower low, and then a high. It didn't take out this high though, and then the market produced this, and then it took these lows. So what we'll be expecting actually is to push up, which the market for 2 weeks started to push up. So what we'll be looking for next is to see how we will participate in this current trend. So remember that this is the low that we had earlier, that is holding this bullish movement, all of this consolidative bullish movement. So this is the low that has been holding the movement. So, and also the high that has been resisting the movement. So this is quite pretty simple, right? So follow me on this, and then we'll get to the bottom of all of this. So now let's move to daily time frame and see. So you see on daily time frame it has a bunch of consolidation. So you see it has a bunch of consolidation, which the consolidation came and ended here on this liquidity on this candles low, right, this week. So you see it came and liquidated the place from this, and then it created a liquidity too. Then it was liquidated here. So remember, it created the 3 candle pattern also here, which is your low, the candles high, right, and then the low that took the candle, and then the retracement into the points of interest, then the buy to this place. So actually when you are actually expecting to sell from here, you're not actually wrong. It's because that is how the strategy is. So you're not actually wrong to actually wish to sell from this this other block. So which you see it did, but it didn't hold for long. It just came to at least 50% of the range, if I'm not mistaken. Yeah, so you see it came right into the 50% of the range, and which is very important. At least 50% of the range is reasonable, right? So you see 50% of the range which the market produce. So it's just left for you to understand that it needs to take a high and then close below the high. So you see this is a candles high that the market took and entered into a point of interest, an institutional reference point, which is another block. It came there and then shifted a structure. If we would go down to lower time frame, you found out that it's a shifted structure, and then the market retraced, and then boom, it came into your 50%. So which is actually trading against the trend, because we know that fully when the market came and took a liquidity here, it shifted a structure here. So what we'll be expecting is a higher prices. So which we know that this candle, this one and this one, are also playing a vital role, because this candle do not close inside this candle. So that's to tell you that the bullish market is still holding up. So you see everything is actually great. So excuse me. The next is, we see that the market is going at the direction. So what we will be looking at the moment is to always buy when the market is bullish. Always looking for buying opportunity, because you see, if you will participate in this sell to this 50%, you might as well thought that the market might come below these places, and that is where you might be deeply hurt by the market. So you see, let me go to 15-minute time frame. You see what happened here. So you actually see what happened here. When the market came, normally the market came and then took the lows, these lows. So when the market came and took the low before pushing up, you see it actually came to an institutional reference point, which is another block here, and then it continued to push up. So it's just a retracement into an institutional reference point and taking some lows before it continued to push up high. So if you will put this at the back of your mind, that before a market goes up, it takes out some lows. Before the bullish movement, it takes out some lows before going. So that's it. So if you're in a bullish market, what you should consistently be waiting for is, what you should be consistently be looking for is a buying opportunity, not just selling. You can, might as well look for sell opportunities, but you should just know that you don't sell it for a longer period of time, because the overall market is bullish at this market condition. So it's actually important if you will put that at the back of your mind. So let's deep down into some other places. So you see, as this market took this low. You see, took this low, and then it keep on going. Mark you that whenever market comes to take a low below the low or above the high, there is almost always an institutional reference point. You see, for this place now, we have two aligned institutional reference point, which is the breaker block and then the fair value gap, right? So for those using SMT, it will be very easy for you to spot those things. So it's pretty much easy. All right, so now the next is this place. You see, every day's candle, every day, every session, every day it produces this thing. The market mostly takes a low before going up. You see, it took this low before going up, it took this low before going up. So mostly when the market takes a low and push up and close it, the next candle don't go below it. Mostly when it's a 3-candle pattern, it don't go below it or above it if it's a selling scenario. So that is it. You see, it took this low and then continued. This is a continuous market. This is a turning point candle. This is a continuous market. This is also continuous. You see, market came here and then took this low, The reason why it double took a low here is because it has not yet completed the institutional reference point. So you see this low was literally taken. You see, it took it by this week, so it's actually tiny, but I can magnify it. You see, it took it. So that's how it is. It takes it before going up. It takes a low before going up, right? So that is how you keep marking your directional bias. So for this, what are we seeing here? So the market has actually come to a point where it's a reasonable point. Let's draw a Fibonacci, and you see the market came, and this is your 50% here. I mean your 50% here, and this is not a order block that will hold it because of this place, which this low, and then this place here. You see, this is another block actually that market came and tapped into it, and then this is an inducement. Market came and wiped the inducement, touched another block, and then start pushing up higher. So you see, what we'll be expecting is higher prices in USD CHF, and you know, when you get the analysis of USD CHF correctly, you are likely to get GPUSD correctly, because GPUSD is opposite to USD CHF mostly. So, and this is it for now. If you are in a bullish market or bearish market, you should just not put this note at the back of your mind. Put these shapes at the back of your mind. So these places, before the market comes and tap into it before going, these are where the institutional reference point normally are. This is where they set them. So sorry, I have difficult time marking bullishes. Alright, so this is it. This is where institutional reference point sits at. This is it. So these are your order blocks, fair value gap, breaker blocks, all of those things. So you need to, whenever you see a chart, know how to read them. So if we have more demands, then I will take you step by step on how I approach the chart every single day I step on my decks to trade. Alright, and without any much more, this is actually how to read the chart. Alright, so thank you very much. Like, subscribe and comment. Thank you.